All right, everybody. Well, thanks a lot for joining me as at the close on Tuesday afternoon. It has been a rather volatile start to this week's worth of trade. Very quickly over the weekend in that pro analysis class, what we really sided with was the simple fact that we expected volatility to be rather rampant up until the point we either take out the swing highs, which we've priced in towards the back end of February, or until we come down into this green rectangular box. As such, we've begun the week on Monday with that of an engulfing candlestick. This is what we call a long day Morobozu candle. It is a relatively strong and very healthy bullish candlestick. But once again, today being Tuesday, we do have that of a little inside day spinning top. We closed down 89 points to begin the week for the first two sessions on the Dow Jones Industrial Average. We are printing up just over 100 points. However, you need to think about a few safeguards, all right, on the market itself if you're looking to jump into some individual trades. Generally, what happens is, in this general type of environment, you're going to see some rather erratic price behavior. You're going to see some pretty strong pops like we saw on Monday, followed by some pretty stellar sort of drops. And overall, the net movement, so to speak, is generally rather immaterial. So what that does, if you're looking at potential swing trades, is that it will sort of sucker you into potentially the long or short trades up until the point the market clearly decides the direction which it's going to move in for more so the intermediate and the macro time frame. So to really alleviate that, or to take the pressure off yourself from jumping into a bunch of trades, what we've done again is just given people a little bit of a criteria as to what they should look for before they begin jumping into individual trades. One of which, of course, as I've already alluded to, is the Dow, the S&P, and the NASDAQ respectively taking out the swing highs in the month of February, or coming back down on into potentially that inverse right shoulder, which is essentially setting up this inverse head and shoulders pattern, right, collectively across the board for the three closely followed US indices. Although technically speaking, again, it is not in the right or the correct location for it to really confirm as that of an inverse head and shoulders. A lot of people are going to pick up on this, and they're going to fall into essentially the buy the dip mentality ultimately, which is going to set up that of that next higher low when it comes to the bigger trend continuation to the upside. In the meantime, however, and really where we find ourselves in the current sort of situation, okay, is that this market, you have to be prepared at least for, again, potential drops first thing or as soon as tomorrow being Wednesday. Or who knows, we could even see another bounce on Wednesday followed by the drop on Thursday. Overall, this week, we're looking for the market really moving in a net sort of immaterial direction, i.e. the market is going to be trapped or stuck. And as such, you should be more or less sitting on your hands until we move through this environment, until we get that clear directional shakeout. And then you can jump on board again with that larger trend direction, the continuation to the upside. Very dangerous to be trading short. It is technically counter trend, even though we have been calling for the correction for a number of weeks now. We have retraced, coming back from the Dow up here at 26,250. We're trading down at 25,500. So we have seen a pretty decent retracement. I don't think that this is going to be that correctional low at the moment, but time will tell. Otherwise, if you're looking to jump into long trades, I wouldn't necessarily immediately want to do such a thing until we get confirmation that the swing high is taken out on the Dow Jones Industrial Average. What's interesting to point out on the S&P 500 is that we do have that of a little shooting star candlestick today. However, we do have a pretty impressive little bounce and gap and run, so to speak, to the upside as well. So again, it is relatively early in this sideways correction, or even that of a potential deeper correction in a percentage and price term as well. But today's candle somewhat negates the very strong session that we saw on Monday. We're going to have to see whether or not it actually plays out if we see any downside activity. Otherwise, again, I'd be sitting on my hands on the S&P 500 until it takes out the swing high. The same is true for the NASDAQ. Nice little gap that we established between Friday over here and then Monday's session. We did have that of a long day Morobozu, a shaved bottom and also a shaved top. So a very strong candlestick here, and a little bit of a sort of pseudo spinning top at the same time as well. Now, one of the stocks which has made big headlines recently, at least over the weekend, unfortunately for the wrong reasons, is that of Boeing Airlines. Interestingly enough, I just want to recap this individual stock, okay, because it's sort of fitting into our trade analysis quite nicely, all right? So since earnings over here, Boeing Airlines has broken out and begun to trend, all right? Since then, our default entry was up here at $419.40. However, there were people who jumped in at $414 and also $404.50 who are a little bit more aggressive, right, on that trend continuation. As soon as we saw this candlestick over here, this was a Friday, come the pro class on the Saturday, we put our stop at 440.19. And we were looking at over time, we didn't know how quickly this would play out. I think unfortunately, again, for all the wrong reasons, this is sort of moved, or at least transitioned this into, I guess, the technical backdrop a lot faster than what it would have played out if it wasn't for such a horrific incident. But really what we've been looking for is for Boeing Airlines to come back down and to close this open window. It has essentially done that yesterday being Monday. And again, today we're retesting it as at Tuesday. So there's a very good chance, although the sentiment and the news on Boeing Airlines is exceptionally bearish, it is very negative, and rightly so, there is a good chance, disconnecting from that using technical analysis, that there's a good chance that Boeing Airlines is not going to crack roughly $360 per share. It's not necessarily something you want to jump into at the moment. Again, you want to use the guidelines of the markets breaking above their swing highs in the month of February before actually placing or wanting to jump into Boeing Airlines. But over time, what we'll do is we will bring down a bullish entry and we'll look to take advantage of the bounce, essentially, which should come from roughly $360 if in fact we do crack below that of Monday's intra-session push lower. All right. Other than that, we're seeing some mixed messages in the individual stocks. Apple's taken off to the upside again, interestingly enough, whereby Amazon is somewhat flat. And just to recap, I guess the big tech companies, Google has hit that 1194 entry. All right. This was after that sort of false Bollinger Band squeeze. The last 2 to 3 sessions have been parabolic rise to the upside. You can see this upper wick coinciding with this 1,200 psychological round number. That more or less has run its course. If you were still in it, or if you were still in it, you should be out of that at the target here. So it's not really reconciling all that well with the overall markets at the moment. Netflix is still continuing to move sideways. Pay attention to that Bollinger Band squeeze. It continues to firm up. IBM again is taking a bounce. This could essentially be the retest of this little swing high over here. So what we spoke about was that of a Bollinger Band double top, setting up on not only this, but a couple of other stocks. Unfortunately, is a very negative sort of letter in the world of technical analysis. And really what we've done on Friday is we've laid the sort of the neckline for potentially, if we see the rejection up in this area, to crack in the future and then come back down to 123, as I've sort of referenced with Boeing Airlines and a few other stocks to close their open windows as well. So pay attention to this. We have a shooting star candlestick as at the close on Tuesday, and that is a big signal in and of itself. Now with these other or select few individual companies, it looks like Caterpillar is setting up that of a bear flag. We could see this continue back down to roughly 128. Pay attention to that. The same is true for COP. We're already back down in this green rectangular box, but if we do see a pop, this is going to act as resistance over here at about 67.50 as well. So a lot of signals are still suggesting that there is going to be weakness around in the market. Although we did see again a strong start to the week on Monday, it looks as though during Tuesday's session, potentially we're starting to reverse the immediate effect of the bounce, and we could see some lingering weakness in the markets for the foreseeable future, at least for the next week or two, until we see that definitive turn. Until then, again, safeguard yourself. Don't really enter into anything new unless the markets collectively take out their respective swing highs. But really what you should be championing for right now is the opportunity to jump into the market at lower prices, which is still going to be the foundation for that first or that next consecutive high-low moving forward into the intermediate and also primary bullish macro uptrend. All right, so that's going to do us as at the close on Tuesday. If you have any questions, please email me. The email address is below. And if you would like to have a look into that analysis class, which we do over the weekend as well. All the best, everyone. James signing off on behalf of Pivot Point Trading. Goodbye.